The euro started falling before the publication of the EUROZONE macroeconomic reports. The decline also affected the pound sterling. The fact is that, according to the forecast, the Eurozone consumer price growth should have slackened at least to 8.4%. However, inflation slowed down to 8.5%. It means that the European Central Bank will continue raising the key rate at least in the near future. This should have boosted the single currency and the British pound. However, the market got stuck. Investors became puzzled amid the European unemployment report, which should have unveiled a decline to 6.6% from 6.7%. Instead of this, the unemployment rate remained unchanged. That's why now traders are waiting for the US macroeconomic reports, since the data from Europe failed to indicate the market sentiment. Taking into account the expectations of the Eurozone inflation figures, the US unemployment claims data could be ignored. In addition, the changes are expected to be insignificant. Thus, the number of first-time claims may increase by 1,000, whereas the number of continuing claims may decline by 3,000. If the forecasts come true, the market situation will remain the same. That's why traders hope that the real data will be either better or worse than expected. On the trading chart, we see that the euro climbed to above 1.0650 against the US dollar, but then dropped. As a result, the volume of long positions declined, thus leading to a bounce. Notably, the euro's depreciation could be explained by positive correlation with the pound sterling. Yesterday, it fell during the US trade, and the euro has stopped its recovery. However, the situation may change if the quote consolidates above 1.0650. This will boost the volume of long positions, thus causing a rise in the currency. According to the alternative scenario, the euro may bounce off 1.0650, which will act as a resistance and continue the downward cycle. Yesterday, the pound sterling was in demand among speculators. At first, it jumped above 1.2050 and then slumped below 1.20, although the asset closed the trading day with a doji candle pattern. The bearish sentiment remained in force. The pair has been moving along the psychological level of 1.2000 for more than 2 weeks, and this points to the fact that both sellers and bulls remain focused on this level. Against this backdrop, the pair formed a sideways channel between the levels of 1.1950 and 1.2150. If the price settles beyond either limit on the daily chart, traders will get a technical signal of the end of the flat movement. Until then, the pair will continue hovering within the range. And how we're going to be in the short term in financial markets? We will definitely tell you in our next news releases. Subscribe to our channel and follow news with us. See you soon.